FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today is 4/2/20. Well, were you caught by surprise by the move and the violence of the move in the market? Well, if you'd listened to this person, you probably would have been better off, no doubt. Been calling this for a while for sure. Hey, first, where do you think the market's heading? What are you going to do about it? Are you just staying on the sidelines? Why don't you send us an email, kl@kerrylutz.com. Well, our good friend is back with us, Avi Gilbert, and you find him at ElliotWaveTrader.net. We've talked with Avi, talked with you a number of times over the years, and you weren't, I guess, like everyone else, you were caught somewhat by the ferocity of the decline, but not by the actual decline itself, were you?
No, the speed of it was clearly shocking to everyone, but the decline itself, I cannot say shocked us.
Yeah. So what was it? What was the signal that was flashing that caught your attention?
My biggest issues, once we got up to the 3,000 region on the SPX, going into the end of 2019, that was about the maximum my expectation was for the S&P. And when it flew beyond that, I warned my subscribers that I am not comfortable with the S&P up here. We were long bonds for most of that period, so we were doing quite well being long bonds. But when the S&P broke through 3,100, I warned them that if we see a spike higher in the S&P and then we came back down below 3,100, that opens the door to take us all the way back. I mean, minimally to 2,600, but it opened the door all the way to get back to 2,200, and that's where we stood. That's where we stand today. So, the IWM, which is the Russell Index, and the Emerging Market Index that I follow, both of those were warning us so much so that in January and February, I started shorting the Emerging Market Index. And that was the best trade we've had this year so far.
So you shorted the emerging. Well, really, there's so many markets you could have shorted. Oil down 2/3 for the year. There's so many good ones, but that certainly was a good one. And it was really a China play.
We were looking down in oil as well. We were looking for that top, and when we were looking down in oil, I believe, topped earlier. But the reason we went with the emerging markets is because the emerging markets actually gave us the lowest risk setup for that short out of all the markets we were following. It gave us a really nice short setup structure and with a very definable risk. The others, because of the manner in which they were moving, did not give us as clean a structure for that setup.
Yeah.
That's why we chose the emerging market for the lower risk.
So isn't it hard to believe that we're living in a world of $20 a barrel oil? The last time we saw that, I think, was during the Reagan years.
I think maybe even earlier. It is amazing. It really is amazing.
Yeah. Well, when you look and you see the way prices have moved, is there anything there that really surprised you besides the severity and the rapidity of the move? Is there any market that really surprised you in its direction?
Nothing surprised us in the direction other than the speed, as I said, and the extent of the oil decline was further than I had initially expected. So the oil decline, whereas we were expecting it, the extent of decline, I was not expecting we'd get all the way down to the teens or the low 20s. I was thinking a bit higher than that, but other than that, it really came down to the speed of the decline.
Yeah, so the speed of the decline. And look, we've got an oil sector in the United States that basically is completely uneconomical. We got the government bailing out every industry. So I have no doubt they're going to bail out the oil industry because it really comes down to the banks. And
yeah, why not? Why not? They're bailing everybody else out.
Yeah, it's bailout nation. So what about in the future for oil? Is it going to go back up again, or are we heading to a global recession, depression that's going to stifle demand for oil and copper into the indefinite future?
I will tell you, a lot of it is based upon my read on the S&P. As long as the S&P is able to hold the 1990 region as support on any further weakness, I actually, and I know people may think I'm crazy, but they thought of me as being crazy in 2016 when I said we're going to 3,000 and higher. When we went into the elections, I said we're still going to 3,000 and higher no matter who gets elected. People thought I was crazy then. People may think I'm crazy now. As long as we hold that 1990 region in the S&P, I still have a very strong pattern that is pointing us to 4,000 and higher. So that means that oil probably will get one more multi-year rally.
Yeah, one more multi-year rally, huh? So
that's what I'm looking for.
Yeah, remarkable. A lot of you out there listening always curious about precious metals, gold and silver. We want to talk about platinum. It's not looking too precious now, although palladium is. What do you see setting up for gold and silver?
I think silver is giving people one of the best opportunities they will probably see for the rest of their life. Silver potentially can still drop down, towards that 11 region, but overall, I think if you're seeing silver sub 15 and you're not a buyer, and you're a long-term perspective person, I think you're missing the boat here. Silver probably has the most potential out of all of these that I'm seeing at this time.
Really? So silver is a screaming buy, opinion. And it got beat.
That's my opinion.
You do
especially,
know,
especially if we are able to get one more dip below 12.
And of course, you do know that there is really probably only one gold mine in the world, silver mine rather. I take that back. Silver mine that is profitable at these prices. All other silver basically comes from byproduct mining of copper, of lead, zinc, and of gold. And nobody's out there actually actively pursuing it. Very few pure silver mines. So the cost of replacement, and then if you have copper production reduced, automatically you get gold and silver production reduced. Right now, all the mines are closed because of the coronavirus. The only business I see open around me, they're building houses, believe it or not, Avi. The guys are out there. They seem to be social distancing themselves, one guy working on each house, but they're building houses here that probably nobody's going to buy for the foreseeable future.
FSN Radio. It's all about what's next.
Silver One Resources is an exploration and development company backed by strategic investors Eric Sprott and SSR Mining. At Silver One's Candelaria Mine project in Nevada, there is already a historic resource estimated at 127 million ounces of silver, which Silver One is developing and advancing. The company's Phoenix Silver project, located within the Arizona Silver Belt, is an early-stage exploration project on which native silver vein fragments have been discovered near surface. One grab sample assayed an astounding 14,688 ounces per ton. Yes, that's right, ounces, not grams. Silver One has tremendous exploration potential, is extremely leveraged to the price of silver, and is cashed up and poised to increase shareholder value. Silver One trades in New York under the ticker SLVRF and in Toronto under the ticker SVE. To learn more, go to silverone.com. That's silverone.com.
The Financial Survival Network. It's all about what's next.
Well, I know I go down to Florida quite a bit, and I know that their real estate is getting hit right now. Has been for a little bit because I think they've overbuilt.
Yeah, well, on the one hand, we had a lot of tax refugees basically fleeing the Northeast and California and Illinois. So whether that trend is going to be reversed or exacerbated, they're betting, obviously, because they're still doing it, that they're betting that it's going to be exacerbated, that there'll be more tax refugees. I'm waiting for the bailout of all the state pension plans and the states themselves. That's
I will
coming.
say my perspective on that is that if we can get this final rally up to 4,000 and above, I think that'll be the final bubble. And the potential exists after that rally completes that we could be heading into a Japan-style deflationary period that could last for a decade or two. So whether or not they're preparing for more fleeing the tax haven, I know I'm going to be fleeing to that tax haven once my youngest of 6 goes off to college in a few years. But you'd be foolish not to almost. I mean, the opportunity is incredible. But besides for that, I still think we're in for some major financial pain. And you're pointing to the right places: the pension funds, the states. I mean, we have so many problems inherent in the system. I think all of this comes to roost once we start moving into the later 2020s and the 2030s. I think are going to be very, very painful for most people out there.
I could not agree with you more, Avi. It's insane what's going on here. Whole restructuring of the global economy. Right now, the global economy has effectively collapsed. I don't care if China's getting back to work or not. Nobody's buying their stuff. So if they make 800,000, fake Barbie dolls, it doesn't matter because nobody's going to buy them. So they're just going to be stocking this garbage up. And then in another month or two, when the Western markets do open it up, they're going to be desperate and they're going to blow that merchandise out the door. And we're going to see prices head lower. So many things that we don't even appreciate now, that we don't even understand, are going to really come to the fore. So of the buys out there, silver, huge buy. Oil, you're thinking is really kind of had it for now. And
I think oil will probably be bottoming out around the same time as the S&P. I think we're going to see a very strong snapback rally in oil very soon. But ultimately, I think if the S&P can hold that 1990 to 2060 support region, as long as we hold that region, I think we can set up for a multi-year rally in all risk assets. But I think that may be the final blow off top, though.
I think you could well be right, and it's only normal that you would have that snapback rally, that dead cat bounce, just to blow out all the weak traders, if nothing else. The way the markets work. And finally, what is the one thing you would warn people about as far as what you see coming in the charts and on the Elliott wave? What's your biggest warning right now?
A lot of people put a lot of faith in these large ETFs and the manner in which we saw a lot of them acting of late. I'm not even talking about the double and triple leveraged. The average investor should run from those faster than their feet can take them. No real investor should be touching any of the double or triple leveraged ETFs. They are a pure trading vehicle, and even traders have been getting burned on them of late. But the ETFs in general, I think people should really strongly rethink them, especially in the metals market. The GLD, I did an entire hour-long webinar. I'm a lawyer by training, so I went through the prospectus in this webinar. We have it on our site, and it explains why, if you're a long-term investor in metals, the GLD is not a vehicle for you. So I would be very careful if I'm a long-term investor and I'm in any ETFs at this point.
Yeah. So strictly as trading, nothing long-term, and be very, very careful, because you just don't know. They can be doing other stuff, right? They can be actually buying options and futures.
There are too many games that the owners of these ETFs play. Again, I'm not even touching the double and triple leverage. They are designed to go to zero. They're designed to go to zero. I'm not even talking about those. Stay away from those like the plague. No pun intended today, of course. But with regard to standard ETFs, really need to do your due diligence, because you could wake up one day and not realize that you own something that you did not expect.
Yeah. Yep. And the very thing that made them popular had made them a wise investment, perhaps, and that made it the convenience factor is the thing that is going to kill you now, because too much got taken for granted. No real solid analysis in these ETFs. They're supposedly just mirroring the market. But now that things are blowing up, you can have ETFs blow up. And then if an ETF goes down lower, there'll be that knock-on effect where everybody will sell the ETF, and the ETF will have to sell their underlying shares. And if you have that in a few ETFs at one time, you can have a cascading crash, a flash crash, quick.
If you saw what happened in GDX, we saw something very similar to that, where it traded over 7% lower than its NAV. I mean, the things that we saw happen during this, I think we're just getting a taste of what we're going to see over the next decade or two.
Yeah.
So people should really, really open their eyes and be very careful about what they're going to own.
Okay. Well, that I think is very, very sound advice. We can't thank you enough for coming back on, Avi. We'll be in touch with you shortly to update and really helping people out. Greatly appreciated. So on that note, questions, comments, what do you think of what Avi had to say about ETFs? What's your feeling about ETFs? Are you invested in them? Do you have concern? Maybe you should. Why don't you write us an email, kl@kerrylutz.com. I'll share it with Avi. We'll get back to you on it. Avi, great to talk to you. Your site, again, ElliottWaveTrader.net. And there's a link to it in the show notes on Financial Survival Network. And please feel free to sign up at our site, financialsurvivalnetwork.com, for our newsletter. Avi, it's always great catching up with you. Be well.
Thank you so much for having me.
Hey, stay safe. Thank you.
You too. Bye-bye.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.